Okay, well, there's literally countless different scenarios why someone would borrow privately, and similarly going to be countless different scenarios how someone's going to pay back the loan. But I'll talk about the most common, and then I'll give an example to illustrate that. So probably the most common way that somebody's exiting a private loan is by refinancing with a bank. So the objective, again, and I've talked about using private loans as a stepping stone, so I'll give an illustrated example. So imagine somebody who's committed to buying a pre-construction property. Maybe they agreed to buy the property 5 years before it was built. Now 5 years later, the property's completed. They've already left 20 to 25% deposits, and they now need to close on that property. During that 5 years, they may have assumed that they were able to qualify from a bank. Maybe things changed. Maybe the bank's regulations changed. We've seen both of those things happen in the past few years. So in this scenario, this is where a broker knowing about Hosper would step in with their client and say, okay, unfortunately, we're not qualified for traditional lender, but here's a temporary alternative. So what Hosper's going to do is we're going to now look at the existing value of this completed property that's just been built. We're going to offer the client a first position loan secured by that property. The amount that we lend would be relative to a percentage of the value of that property. And then the borrower is able to use the financing from us to close on the purchase. Now, not only do they not lose the deposit, but they may now also gain whatever has appreciated in the 5 years that property's been being built. And now if let's say that we've offered them a 12-month term, they're using that 12 months as a runway. So still working with the broker that brought them to Hosper to now doing what they need to do to qualify with a bank. 12 months later, as our term matures, we may enter into conversation with that borrower about renewing or extending the loan. But if they're successful to obtain that traditional financing, they're going to say to us, thanks but no thanks, decline the renewal, obtain the bank financing, use that bank financing to pay back our mortgage, and they've graduated to a lower cost of borrowing. Our investor, our fund gets the capital returned, and we look to deploy that again in a similar scenario. So that would be a very typical scenario of a mortgage we do. And then there's going to be a ton of fringe cases where borrowers planning on selling the property, selling a business, waiting for a settlement, refinancing another property, and all those together is what we consider an exit strategy when we're looking at a loan.